All right, now we want to move on to the second indicator that we want to get familiar with. As you can see, we agreed to proceed. Insert indicator trend. What's the second one? Bollinger Bands. They're basically the same channels that we've been drawing manually up until now, but there was a problem with that. What was the issue with our channels? It was that we were drawing them in a very rigid and stiff way, meaning we were just drawing some lines with some boundaries that, no matter what, we wanted the price to react to them exactly. What's the cool appeal of the Bollinger Band? We've always wanted to know how much the price fluctuates within a trend, and the Bollinger Band does this for us by giving us 2 degrees of freedom. For example, over a base period, it draws 2 lines for us, an upper and a lower one. That's the Bollinger Band. It consists of 3 main factors, 3 lines, the lower edge, the upper edge, and the middle line. So when we want to know how the price is going to move within this range, whether it will move in the same channel as before or within the Bollinger Band, which now has a higher adaptability and can, here it moves much more flexibly in relation to the price. This is how we calculate it. When the price hits the upper band, we expect it to come back down, first to the middle line and then to hit the lower Bollinger Band. And when it hits the lower band, we expect it to go back up, first to the middle line and then to reach the upper edge of our Bollinger Band. In its default setting, the middle line is the same 20-period moving average, but here it has been given 2 degrees of freedom. For example, I make its thickness a bit larger there. Its period remains at 20, 2 degrees of freedom are applied to the close, and for example, its color is the same default green. I confirm it. Well, here we can see, I think we made the thickness too much. I want to show this part more precisely. It's better to reduce the thickness a bit. What we see here is exactly as we just discussed. For example, starting from right here, I showed this. You see here, it has touched the upper edge of the band and hasn't stabilized any close above, and then it has come back down and touched. It has come to the lower edge of the band, then gone back up again and returned to the midline. There was one close outside the band, then it came back down, another close outside, and from here it returned inside, right? Then it went back up to the midline, came back down, and as we expected, it reached the upper edge of the Bollinger, and that's exactly what we see. Here it made a shadow 3 times, couldn't break through, and the momentum reversed back down. We didn't have any close above the Bollinger. I'll erase this and reduce the thickness here so we can see better. Here it turned back again. It came up to the upper edge of the Bollinger, then came down and hit the midline, then the upper edge again, with a close outside. So the next candle closed outside, and from here it reversed again. When it comes back inside, what do I expect? That the first place it can stop is the midline, and after that it can get support again. It hit the upper edge of the Bollinger, came down again, then went back up and ranged on the midline with one close outside. From the point where it came back inside, we had a ranging market here again. Its upward movement is to the edge of the Bollinger and its return is to the lower Bollinger. Whenever there is a close outside, it happens. This continues in the direction of its trend. In the same way, wherever we see it, we can use this Bollinger like this. Look, it makes no difference. Let's look at this together. Just like the previous explanations, it hit the upper edge of the Bollinger, completely reversed, closed outside, and then returned inside. It hit the upper edge of the Bollinger, moved up and down, got stuck at the middle line, had closes outside, then came back inside, formed a range box, and the closes went outside to the upside. When it comes back, it ranges again and reacts to the edges in the same way. It's very important that when we have a ranging market, like here this part, if we think the market is ranging, it's really clear. We see this in a ranging market. Whenever it comes down, it hits the lower edge, then goes up to the upper edge and comes back again. Lower edge, upper edge, down, up, do you see? It's moving very nicely within this range, and we can use our Bollinger Bands for this. We can always identify this, or even trade it by buying and selling within the ranging trend. Some of our trading strategies work in trending or moving markets, and there are trading strategies specifically for ranging markets. One of the strategies we use in ranging markets can very nicely give us clear price targets and help us achieve them, so we know. Since it reverses from there, we can also identify its lower target, allowing us to take both good buy and good sell positions. Some people only go for trending markets and work with just one strategy. Some people go for neutral or so-called ranging markets. We teach you both strategies, how to trade in both trending and neutral markets. Let's move on to the next indicator, the Trendia indicator. Our next indicator is the Ichimoku indicator. You may have heard a lot about Ichimoku up to now, but there might be many aspects of it that you don't know. Here, we'll go over all the components that make up Ichimoku together. But first, I'll remove the Bollinger Bands and bring up Ichimoku. Let's see on the chart what tools Ichimoku is made up of. As you can see, the Ichimoku system features the Tenkan-sen line, which typically uses a period of 9. By default, the indicator also includes the Kijun-sen, which is set to a standard period of 26, as well as the Senku Span B, which has a period of 52. These specific parameters represent the standard default settings used within the Ichimoku system. As for their colors, the Tenkan-sen, which we're about to see, is red, the Kijun-sen is blue, and the Chiku-span, for us, it's green. We set the up cloud to green, and we set our down cloud to orange. So that we can see it more easily on the screen, we make our up cloud green and our down cloud orange. We also come in from this side. We set the Chiku span, which is green, to purple, so it doesn't get mixed up with the other colors. We can even add a bit of thickness to the edges of our clouds. The Tenkan-sen and Kijun-sen lines, which are more important, we should also make them thicker. Okay, we click OK, and the Ichimoku is applied to our chart. Guys, the Ichimoku has two lines, Tenkan-sen and Kijun-sen, two of them. They are moving averages with different periods, right? And in the moving averages section, we talked in detail about how their cross or break generates signals. But keep in mind that the calculations done within these moving averages are different. They are completely different from what is used, for example, in simple or exponential moving averages. Here, the formula for calculating the moving average is entirely different, and if necessary, we'll thoroughly review these formulas together in the Ichimoku strategy section. What are we seeing on the chart? This is where, just like with moving averages, when the smaller average crosses above the larger average, what we call a crossover, a breakout occurs. This generates a signal which is considered a buy signal, and whenever this crossover happens in the opposite direction, it generates a sell signal. As far as moving averages go, we know that no moving average is used during ranging markets. They are specifically for trending markets, and once the market starts trending, we can see this, how beautifully it can lead us to much bigger target goals and create them for us. Okay, now, what were Senku Span A and B? These are what, in technical terms, create the Kumo cloud structure for us. It works like this. Whenever Senku Span A is above Senku Span B, we see the Kumo cloud as green. Sean. That is exactly when we decided to color the Kumo cloud green. Yusnai. And whenever our Senku Span A line is positioned below our Senku Span B line, we observe a shift in the market trend. We see the cloud as an orange-colored area. These are the settings we chose ourselves to decide what color to display the bullish and bearish clouds. Well, the meaning of these clouds is for support and resistance, and their distance from the price indicates whether they are acting as support or resistance. Guys, let's review this part together. Let's see where we are in the Ichimoku. Look, what happened here is that, first of all, the shorter moving average crossed above the longer moving average. That is, the Tenkan-sen crossed the Kijun-sen and turned upward. And after that, the clouds were broken. And it's moving upward. It's going up. Also, we show our Chiku span in purple. The Chiku span is also lagging by one average. This is exactly what it shows us, that I'm making these crosses beforehand with the Kijun-sen, Tenkan-sen, and the cloud. If I want to mention a point about the Chiku span, when there is nothing in the way of the Chiku span, that means there is nothing in its path here. No cloud, no candlestick. There is absolutely nothing in its way, meaning the chart's path is open and clear for it. This allows it to move easily, but when we see something in the way of the Chiku span, things get a bit crowded. Like where? Like here, where it gets entangled with these candlesticks. See? I'll highlight it a bit thicker for you. Here, where it gets caught up with these candlesticks, you can see that the market gets a bit stuck in this area. Again, when the Chiku span gets stuck along the way, the market also experiences a bit of a stall, but as soon as its path clears, it moves freely. See how sharply it starts moving? It comes down further, and here again, when it gets caught inside the candlesticks, it gets stuck here and there inside the Chiku span. So having a clear path for the Chiku span really helps the market move faster in the direction it's already heading. Let's move on to the next indicator. The next indicator I want to talk about in this reset is the moving averages indicator. But before that, you need to right-click on the screen and in the indicator list section, or by using the shortcut Ctrl+L, open the list of active indicators. Take a look at your chart and delete any indicators you don't need, and now let's move on. The trend indicator and moving average. All right, here we come to the moving average, and we see that in the parameters, we can select a period for it. So what does this period mean? It means that in whatever time frame I activate it, for example, daily, it refers to days. When I set it to the number 14, it means calculate the average of the past 14 days and keep updating it with each new candlestick that forms and display it for me as a line. So if we move it to the 1 hour time frame, it means 14 hours. This period changes based on the time frame and the corresponding candlesticks. On the weekly time frame, it becomes 14 weeks. On the 1 minute time frame, it becomes 14 minutes. That's what it shows for the indicator. There's a method option. Let's move on to the method. In the method section, we can choose whether this moving average should be simple or exponential or other types. We can see its different types here. And in the section dedicated to moving averages, we will talk about each of them in detail. Simple, exponential, smoothed, and linear weighted, we will discuss all of these in detail. Now let's move on to the next option that is available to us here, apply to. What does that mean? It means based on which factor of the candlesticks should I calculate this average. Should I use their closes and take the average of all the closes accordingly? Or should it use their opens, lows, highs, or any other factors we can set for it? Basically, guys, all indicators operate based on the candle's close. That is, all types of oscillator indicators. When a candle closes, that's when its movement actually starts, or it gives its signal. That's why they always say indicators are lagging behind the price. Because by the time it gives a close and wants to signal, maybe that close is at a point where a trend has already been broken. Maybe that close is at a time when it's too late for entry confirmation and the indicator is delayed. But that's why we analyze using the price itself, or price movement, and we use the indicator as confirmation, so that it serves as confirmation for our own analysis. Now here too, we can choose its color. For example, I select the color red. I can set its thickness and then click OK. This comes onto my chart with the default period of 14. So this way I can bring this indicator onto the chart, and one important point about these moving averages is that the closer they are to the price, the sooner they can give a signal. But keep in mind, if they're too close and not properly customized or personalized, they'll generate too many signals, which can confuse a trader, as you know. The way to get signals from this is that we should have at least 2 moving averages, and with these 2 moving averages and the direction they take, we can make a series of trades based on them. In the moving average strategy section, I'll fully explain how to get signals and the important confirmations, which prevents us from making mistakes. And now I'll right-click again. If I want to delete this indicator, I can remove it from my indicator list. Again, I go to Insert Indicator Moving Average, and this time we're going to talk about the parabolic SAR. Do you know what parabolic SAR means? It stands for stop and reverse, meaning that's where the trend stops and reverses. Let's see how the parabolic works. The parabolics, in the style section, you can choose a color for it. For example, I'll pick black. For thickness, for example, I'll increase it a bit. The step and maximum values are for the default settings are enough. It's always set to these defaults in different time frames. I'll zoom in a bit so it's easier for you to see and for us to talk about it. Look, guys, there are a series of arrows or dots, some below the trend, some above the trend. It draws these for us. From this parabolic, we can only... The point is to use it to see which direction the trend is heading, where it stops, and where it reverses. But I've always said never with just one indicator. We don't have confirmation to enter a trade with just one indicator. We need to identify our trend in higher time frames. If this upward move is just a correction of a main downward trend, then here we can get familiar with its parabolic. We know from this point whether it's going to continue. Let me show you. Let me reduce the thickness of this line and show it to you like this. I'll also change the color of our parabolic from black. Just right click on the indicator. When we double click on our indicator, we can also change its color. For example, I'll set it to blue. This edit is done. Now I'll come here, pick up the pen with a thinner line and talk about this. Look guys, here the parabolics are above, which actually shows that it was in a downward trend. Up to this point, what is it saying happens here? The last parabolic has come and stuck to the first one. We said parabolic. SAR means stop and reverse, meaning it stops here. Does this downward trend turn into an upward one? Here, when these intersect and become one, it means this upward movement stops and this downward movement starts, even here. In this range section, the parabolic has acted. In this range section, again, when they reach each other, this upward movement happens. What was called a range or a correction has been stopped, and the downward movement has started again, up to the point where they align again with the parabolics, and this upward movement is shown. As I said, again, if we are only supposed to trade based on the indicator's confirmation, you can see that we can do that. But we might have a lot of errors or many failed trades in the market, though its confirmation can be very useful for our own analysis. Right-click on the indicator, and we can remove the parabolic. For now, we are doing it one by one. We are getting familiar with the indicators at a basic level so that later we can talk about them much more thoroughly.